but you know, we're just outside London Killzones, so there's definitely still a trade that I would have taken. And then we've got the fair value gap as well. So boom, liquidity swiped and it tumbles. A 10-hour trade. Welcome to my brand new channel, Trade with Romz. See, in this particular episode, I'm gonna break down two trades actually. One's a 10-hour trade. Second one is I believe it's a 5-hour trade. Both intraday in the same day. So let's dive into the charts. Yes, family. So let's get straight into the charts. So we've got EURUSD here, and you can see on the daily that it's completely bearish. I'm gonna actually go into the price action in this area here. So you can see that we're clearly bearish. So ideally, you want to be getting into sells, right? Any buys that you get into, they're not going to be long-term holds. And I'm going to quickly go into it time frame by time frame and show you my thought process. And this is not actually a trade that I actually got into, by the way, but it's just a back test and it's a clean setup. There was a buy in there as well, but it's not as clean, although there's probably cleaner entries that I could look for. But I'm going to show you my thought process just behind some of the price action in there. Hopefully you guys can learn something from it. Again, it's going to be, it's pretty much ICT concepts, or inspired by ICT concepts. So let's get it cracking. All right, cool. So what you can see here on the daily time frame, right? You can see that we're completely bearish. That's very clear. And then you can see here that the daily has actually filled this imbalance in here, right? This liquidity void in here, and it's, you know, filled it here. If I tap that, you can see that this wick, right, gone perfectly into this, right? Perfectly into this wick here. Swiping this buy side liquidity here. Making it clear that that's what the agenda was, right? To take the money, swipe the buy side liquidity, and fill the imbalance as well. And now you can see straight after it did that, we had an aggressive push down. Okay, so at this point, if you're looking at the charts on one of these 2 days here, you're like, you know, you don't want to be buying against two fat bearish candles, right? You want to be getting in on a sell if you can, because you know that more than likely this right here is gonna be taken out, right? It's potential bullish order block here, potential, but you know, you could get a reaction here, but let's be honest, we're so bearish that you're probably gonna have the market go straight through and create a new daily low, right? So look at the daily here. You can see what the agenda is here. The narrative is quite clear. I'm not gonna do replay mode. I'm actually gonna just show you the price action after it's already happened. But so you can see it in real time, right? So 6 a.m. on the 17th of August, right? You got the 15-minute time frame, right? This is how I'll be looking at this. I'll be probably going down to the 15 minutes to get an idea. I would know clearly that the market has engineered the liquidity here. Remember, we're bearish on that daily time frame. So ideally, I want to be getting into sells. Okay, so you can see that's where the money is, right? You can see that liquidity also was engineered here, and this is what's being swept at 6 a.m. at that time, right? Then we're thinking, okay, what's it looking to do? What's the agenda here? And I'm thinking, okay, you do have a fair value gap up here. You see this gap on the 15-minute. As the last time, you know, price made that push and made an aggressive low. So you got that fair value gap that potentially want to be filled. But you know, it might not get there. We are bearish at the end of the day. So we're going to the 5-minute. Cool. And then what you can see here is on the 5-minute, you've got tons of liquidity here that would have been swept when the market made that aggressive push up. But we are bearish. All right. So it's taking liquidity now. It's swiped liquidity. And then we've had a market structure shift on the 5-minute. For me, the last point of the major push is here. So you know, that's a solid market structure shift. So I'm thinking, okay, you know what, you know, potentially, you know, now we've had this shift, and then we've engineered liquidity throughout Asia session, and now we're sweeping it. Maybe, you know, we just want to get into this fair value gap up here. And then we want to keep moving back down. That's what my bias would be, right? That's what I'll be looking at. Let me get rid of this and this for now. So if I'm looking at this now, I'm seeing, okay, I do have this though. I do have this bullish order block, potential bullish order block, where it swept a candle there, and then this with an aggressive push, and that's what's taken all this liquidity here from this last push. And there's a fair value gap on the imbalance in here, right? So you've got that to be aware of, but we're miles away from that, right? If we're gonna get a reaction, it's probably gonna come from here. But here, so this will be 6 a.m., right? So I'm not even on the charts yet. I'm probably not even awake yet, right? I'll be looking at the charts from I'll be looking at from just before 7 a.m. So if I speed up, and then, oh, boom, right, 7 a.m. hit. So this gets swept at 7 a.m., right? London open. You know, ICT always teaches, you know, the opening sessions of London Open, New York Open, you're going to get an aggressive push up or push down, super liquidity, and you can often get an entry, right? So you can see that this liquidity was swept. Came back down at London Open, an aggressive sweep into this major fair value gap on the 5 minute, and then it's tumbled down, right? You still got this sell side liquidity at this point. Let's see what happens next, right? Sell side liquidity is taken, right? And then price taps into this bullish order block. And let's see what happens here. Okay, so now price comes back up, right? So for me personally, this is why I'd be like, you know what we've got here is, you know, we're bearish on the daily, and I trust the daily. That's what I want to be trading with alongside. And I like what I see here, the sweep, you know, so I've got this candle here, you know, got that swept this high and then made an aggressive push down. We have bounced off of this bullish order block, which took this liquidity, but on a higher time frame, we're bearish. So I'm gonna, you know, wanna ideally look at potentially even setting a limit here to enter, and then targeting these lows. Let's do back out, targeting these lows to make it in another lower low, because, you know, we're bearish on the high time frames. However, we can see that, you know, we do have this fair value gap up here that potentially needs to be filled, so that could keep going higher, right? So if I want to be really aggressive, I could just set a limit, bearing in mind that we have reacted from here. Or if I want to be really conservative, I could just wait to see what happens on the smaller time frames, right? So if I go down to the 1 minute, you can see here, this is quite a nice price action. That's actually right. You got a nice bullish order block here. You got the sweep actually down here, and this is all within the other 5 minute bullish order block. So it's beautiful price action down here, but we'll get into that in a second, right? So this is the 5 minute candle that I was talking about that swept this high and then made an aggressive push down at London Open. We've got, you know, the imbalance or fair value gap in here. So let's see. If I want to be conservative, then I want to, you know, wait to see what happens on the 1 minute. So if I speed this up, we tap in. All right, so we tap in. So I could just set a limit here. What is that? Like a 6 pip stop loss. Yeah, like a 5. Yeah, so let's call it with spread. 6 pip stop loss. And targeting way down there. So, you know, probably like let's have a look. If I'm targeting, first target would be, you know, try and make a new low, hopefully. 1 to 6, then at least a 1 to 10, right? Preferably, but see what happens. Obviously, I know what happens here. This is back testing, but I'm just trying to talk through as if I was thinking like I was actually trading it live, right? I'm trying to be as realistic as possible. So down to the 1 minute, it taps in. I'm being conservative, so I'm like, okay, I'm not going to enter just yet. Let's see what happens here. We'll keep going higher, right? Okay, good response, and we have a market structure shift, right? So let me quickly take this out. So you can see we've got the high here, we've got a low here, we've got a high here, a low here, we've got a failed high, a failed swing high. It drops, and it creates a market structure shift. And this, at this point now, I would 110% be entering on the 1 minute candle. So that 1 minute candle, and I'll probably put the high, the stop above that high. I'll be entering here for sure. What's that? 3.3% stop loss with spread. I don't know, 3.5 depends on your broker. Let's just say, let's say 0.5 pip stop spread. Let's see what happens there, right? Market structure shift, limit is set. We are in. Okay, here's the thing. What you could say is, right, because we're in the London kill zone currently. 7 a.m. is here, right? 10 a.m. is actually coming up, right? This is actually the 10 a.m. candle when the market structure shift happens, right? So both of these two trades here, this is not as high probability because we're bearish on the higher time frame. This buy is a lot more risky, but it's a possibility. It's not a buy I would have got into. I'll explain why shortly. But we're just outside London kill zone, so there's definitely still a trade that I would have taken after seeing it enter my POI during the kill zone, right? So the market structure shift happens, and then we've got the fair value gap as well. So I would have set a limit and we would have tapped in, right? Look, it goes, and look, what's even great about this? Look, it's engineering liquidity before the entry. All this liquidity, so people are probably entering here. Like they're seeing it falling, they're seeing it make higher highs and lower highs and lower lows, up, down. They're entering here, and then boom, liquidity swiped, absolutely swiped, right? And then it's also engineering liquidity here. So if you're selling early, you're getting swiped. If you're buying too early, you're getting swiped because it taps into the POI, it almost pretty much creates equal highs. But if you long as you set your stop loss with enough space for spread, you're good, you're in, right? Perfect. Taps in, then we get another mitigation up here, and it tumbles, right? Perfect. Prime setup, great setup. All right. So I would have actually been targeting down here. Let's see what happens, right? It goes. Right, so look, it actually takes out, if you would have gotten to here, let's go back on the 5 minute. If you would have got into here based on this bullish order block that took this liquidity and made this high, then, it would have actually taken that out. So you can see almost, well, not quite, but almost a 10-hour trade. It actually went 1 to 9.26. Still solid. And you can see what happens here, right? This is interesting because for some people, maybe they would have, taken this trade. And this is why partials are so important, right? You have to attack or take partials at every key area where you may get a reaction. And what's happened here is that prices come down, and you can see this aggressive candle, right? Look at this aggressive candle. It's aggression. It's aggressive. And what it's actually doing is it's aggressively swiping this liquidity. It's sweeping this liquidity. The early buyers that would have got in from here would have then been swept. If you see what happens, it's aggressive, it sweeps, and then it builds up. It shoots back up aggressively, right? See, I wouldn't have got into this trade yet on the buy side until it has a market structure shift on the 1 minute, right? So for me, I would have to wait until it's like at this point here to get into this trade. That's just one of my rules, and it saves me from a lot of losses. But just to break down this price action here, so this is a 1 to 9 trade. So at this point here, right now, like you would have definitely taken hefty partials here, at least 50%, but preferably probably like at 1 to 9, take an 80% partial and leave the rest to run, right? But after this market structure shift here, then you would be like, okay, just like we're reversing, and you look back at the price action and you can see what's actually happening, right? So you've got an aggressive bullish order block sweep, let's say liquidity run here, swipes out this liquidity, and then we get a crazy reaction, a solid reaction. It starts to staircase and build, right? But in here, what you can see here is that this is actually a bullish order block in here, a 1 minute bullish order block, right? And that sweeps liquidity and then creates a new high, right? So this bullish order block in here sweeps this liquidity down here and then takes out this high and creates that market structure shift or break of market structure, right? So then what you could have done is, in here, there's not a clear imbalance down here. Maybe here you could have entered, but you had to put your stop loss underneath here. But you can see this would have been too early for me anyway. I would have waited till this high gets swiped. And at this point, the high gets swiped, right? Again, though, it's the same thing over and over again. You can see liquidity is engineered and created. See this like trend line type vibe, right? Liquidity created, and then you've got this aggressive push down. Aggressive, like one candle, boom, swiped all of that liquidity. Slows down, taps into this area, and then we shift market structure again here, right? So at this point here, this is where, you know, for me and my rules, this is where I would have potentially tried to maybe get in again if I could. Looking at this candle right here, this candle right here is clearly for me like a sweep. It swept 1, 2, 3 candles there. Three candles have been swept, and then it makes a, you know, a new high. So I would have maybe tried to enter off of here when the price comes back down here, and then I would have targeted 4.3 pips stop loss. So if you obviously we're thinking about spread too, so if we add 4.8 if you want, and I would have been targeting if I see thinking that, you know, the price is reversing, then I'm like, okay, where's the money? Where's the liquidity? It's here. It's clearly up here, right? You got all these highs, 1, 2, 3, clear liquidity. You can even include that one as well if you wanted to. Yeah, so that's clear liquidity. So I would have been targeting these highs, easy, you know, 1 to 6. So it plays out, boom, takes out the high, 1 to 6 or 1 to 7 even, and then it reverses and comes, it will take it back out. At this point, you've been break even for sure. Or if you've got a runner, it'll come back, take it out at break even. Absolutely fine, right? So you've got a 1 to 9 trade, and you've got a 1 to 7 trade as well. It's 2 solid trades, a sell and a buy. And hopefully you can understand why I entered. At this point here, it would have been 4 p.m. in UK time. So I'll be off the charts. That's me done for the day. That's my daily price action. That's my daily trades. I'm done. The computer's off. And I'm not looking at any more charts for the day. I'll only be journaling, right? There is more price action that happens next. Let me just play it, show you what happens. It actually holds, makes another high. And look, we tap straight into that fair value gap up here. The fair value gap up here that I mentioned, tap straight into it, break down, tap into this candle up here, break down again, and then we actually end up pretty much tumbling from what I remember. Yep, there we go. So guys, I hope you enjoyed that trade breakdown. There's going to be tons more videos like this, new videos every single week. So don't forget to subscribe, don't forget to hit like, and I'll catch you soon.